Hello and welcome to Technically Fundamental, the podcast where we bridge the gap between lines and numbers for smarter investing. I'm your host, Jakub Hajost, and today I will be talking about Inpost SA, a European e-commerce facilitating and logistics company with a growing presence in the parcel locker market. So, what's this company doing, actually? What's their market share? What they do is basically they put up automated parcel machines around the towns and cities. They aim to cover as big part of the population as possible within 7 minutes from walking distance from the parcel machine. Right, and by putting up parcel machines, they save money on that last mile delivery because they deliver out of home mostly. So they save on that last mile, they save fuel, they save money, and they save environment. So, and also they make it much more convenient for the customer because you could pick up a parcel or your parcels whenever you like, because obviously the parcel machine is open 24/7. Now, for full disclosure, I have to say that I own the company. It's more than 5% of my portfolio, so it's a considerable stake. And when we talk about technical analysis, you will see on the chart moments I've bought shares of this company because there's been several, and I intend to keep buying it. So industry Inpost operates in is logistics, basically. They do deliveries for e-commerce markets. They run something they call, and I really like that phrase, agnostic automated parcel machines, because it doesn't matter what kind of e-commerce platform you have, you can use them. So they cooperate with Allegro in Poland, with Vinted all over Europe, with Amazon in France, with eBay in the UK, and ASOS and Boohoo and all sorts of partners for delivery of parcels, for returns, for sometimes they also do some kind of eco-friendly or zero waste initiatives. Like, for example, in Poland, you can donate your old clothes via Inpost parcel machines. Just bring them in, put them inside of the locker, and send them. And some other company is paying for that transport. So an Inpost is making money, right? So. And market position. Inpost has 43% market position in Poland, market share, 43% market share in Poland, almost 15% market share in France, less than 1% market share in the UK, although they are proud of being number one agnostic APM operator in France and UK. So that's a short introduction to the company. And disclaimer for disclosure that I actually own some stocks. Right, let's move on to technical analysis. And I'm going to try to keep it brief because the last episode was 47 minutes. So this time, let's aim for a bit shorter time so you will not wasting your time. Now, Inpost is not a new company, right? So when we look at the chart itself, we see that it IPO'd on Euronext exchange in Amsterdam in 2021 in January. But the company itself was founded in 1999, not as Inpost, but like as a group of company, Integer and Inpost and all sorts. So it operated for quite some time in Poland. It competed directly with a state postal operator, Poczta Polska in Poland. In 2010, they put first APM in Poland. In 2020, they have already 10k APMs. In 2012, so over 10 years ago, they entered the UK market. In 2014, they entered the Italian market. In 2016, they started door-to-door service. In 2017, they delisted from Warsaw Stock Exchange and had been the acquisition by Advent happened, basically. We'll talk about it a bit later. And in 2021, they had a debut on Euronext, and that debut was largest IPO in Europe that year, and one of the largest in the world that year, 2021. Now, what we see in the stock price charts of Inpost is from the start, when they IPO'd, they were worth about 10 billion euros, and we've got accelerating downtrend here. So the price goes down from roughly 2021 euros up to the very, very rock bottom of about 4 euros per share, and it's a parabolic decline, very fast. It happened within a year, and then what happens is we see an ascending triangle formation forming between 4 euros and about 6.5 euros. You can see it here on the chart. Ascending triangle formation is indication of trend going up, so it's a positive formation. Especially if it breaks out upwards, obviously, which it did. Now, in September 2022, we have, you can see on the chart that short-term moving average rose above the long-term moving average. And that's called the golden cross. So in September 2022, we have golden cross, which indicates change of the trend. So the trend is now going up. And then in March 2023, we have very, very strong confirmation of that uptrend because the price bounces back up from the trend line started by those two first candles in 2021, but also from a long-term moving average. So the long-term moving average is our support now. Right, we've got several support resistant lines drawn on this chart. It's about 747, 750 euros, about 9 euros. You can see it was resistance on the downtrend. So the stock bounced back up, but then it crashed through the level of 9 euros. So if you want to go back, the price has to beat that level. So as you can see, initially it was a resistance. So the price bounced back from that, back down. Then after touching on that long-term moving average, it bounced back up again, and then it crashed through that resistance. And so 9 euros resistance becomes support now. And next resistance, we've got about 10 euros 70 cents, and the next one is 12.30, and so on, so on. So you can see them all on this chart. When I was preparing for this podcast episode, the price was 9 euros 74 cents. But today is rising almost 6%. I think it's about 10.30 right now. So we're heading for that next resistance at 11 euros. We'll see what happens next. And there will be, on 16th of May, there will be a quarterly report published. So we'll see what that does to the stock. Now, I think that wraps up our technical analysis. We've got trend line covers, moving averages, formation. We've got volume. Oh yeah, volume is going down a bit, so that's a bit worrying bit here, because the volume was really good and big when the stock was at the bottom of 4 euros about, but since then the stock price went up, but the volume of transactions were steadily down. That's one of the worrying signs that it may be a bit of a weak uptrend. Still uptrend though. Right, so let's move on to fundamental analysis now. Right, so as I said, the company had an IPO, massive IPO in January 2021. It IPO'd. At the time of the IPO, the market cap was about 10 billion euros. And let's look at the revenue and what happened in 2 years since the IPO. So when they IPO, they soon after they published their annual report from 2020. And what we see there is that Inpost delivered 310 million parcels, including only 2.2 million internationally, and had over 12,000 APMs, less than 11K in Poland and less than 1.5K internationally. And so that was 2020. The revenue doubled from 2019 to 2.45 billion zlotys, roughly €500 million. It doubled, right? But it was still 2.5 billion zlotys and €500 million. Not much for the market cap of 10 billion euros, right? That kind of explains why the price went down so fast. Also, so basically, we see that the company is making just a bit of money, still massive growth, but now in 2021, people thought it was the best it could do due to the pandemic. They thought, oh right, so Inpost doubled their revenue, increased parcel volumes and everything, but that was thanks to the pandemic. Now it's 2021, the pandemic is over, there's no COVID anymore or whatever, so probably e-commerce is going to go down, and that's, well, basically the company reached its peak and it's going to go down now. Add to it that in July 2021, Inpost spent 513 million euros, €500 million, so basically the amount equal to the revenue from 2020 to acquire Mondial Relay. Mondial Relay, it's a company that run pick-up drop-off points in France, Benelux, Spain, and Portugal. So similarly to Inpost, they were doing out-of-home delivery. So you could pick up and drop off your parcel in partners' shops. And Inpost bought it for €500 million, and they became the largest IPO in Europe, and they spent all of the revenue from 2020 to buy Mondial Relay. They actually used debt, but, the similar amount. Now, so you wait for the results in 2022, for results for 2021, and you're asking yourself, did they make any money? They spent all the revenue from 2020. COVID is over. They made this massive IPO. Can they actually beat that 2020 result in 2021? And yes, they did. They delivered 67% more parcels. So almost €500 million parcels, over €500 million parcels, 517 million parcels versus 310 million a year ago, and made 4.6 billion zlotys revenue. That's a whopping 82% increase compared to 2020. They had over 20K APMs versus over 12K, so almost doubled. And also, because of Mondial Relay acquisition, they acquired new 17,000 pick-up drop-off points in France and other countries. They increased the number of APMs in UK and Italy to 3.6K. And Mondial Relay contributed 1 billion zlotys to revenue. That's roughly 200 million euros, so about 40% of acquisition price. And that happened in second half of the year. Could they sustain that growth in 2022? Well, we've got our results now. We've got results that were published a while back for 2022. We've got annual report. And what happens there? Revenue in 2022 rose to 7 billion zlotys. That's roughly 1.4 billion euros. Increase of 54%. Parcel volumes are at 745 million now. 745 million. That's 44% more than a year ago. And Inpost has 28,000 APMs and 26,000 pickup and drop-off points. Almost 5,000 APMs in the UK, 2.4k in France, over 1k in Italy. Look at this. They delivered 170 million parcels in France, more than half of what they had delivered in Poland only 2 years back. Think about it. In 2020, they only delivered 2.2 million parcels outside Poland, and in 2022, only 2 years later, 170 million parcels in France, 20 million in the UK. Mondial Relay generated a revenue of almost 2.7 billion zlotys, over €500 million, roughly speaking. That's basically the amount Inpost paid for it just a year before. So what are the fundamentals now? I've looked through the annual report, and I've calculated price to sales ratio as slightly above 3. Price to earnings, that's high, that's about 50 right now. But with growth companies, it's not really that high. You know, there have been companies with larger or bigger price to earnings ratio that grew massively and made money to investors. Price to book is negative because the company has more debt. There's almost over 6 billion zlotys in debt. So net debt drives price to book to the negative. Basically, book value is negative 800 million zlotys roughly. So there's a risk. Inpost has more loans than assets, and so that's definitely a risk here. Although the revenue at 7 billion, the revenue is larger than debt, so basically covers the debt, and I think the earnings cover the interest rates. Now, what was the growth then? What happened in 5 years with this company? Let's look at the bigger picture. So in 2018, the revenue was 736 million zlotys, and in 2022, only 5 years later, 7 billion zlotys. That's 10x in 5 years. APM's Automated Parcel Machines. In 2018, there were 5,500 total, from each 4.3k in Poland. In 2022, 5 years later, we've got almost 28,000 parcel machines. Out of it, 19k in Poland, almost 5k in the UK, and 2.4k in France. And parcel volumes rose from 83 million in 2018 to 744 million in 2022. So almost 10x as well. As I said before, market share is 43% in Poland. That just proves how good the company is in solving that last mile problem and how convenient it is for customers. 59% of Polish population right now is within 7 minutes walk from the nearest APM. Now, almost 15% market share in France, and 32% of French population is within 7 minutes walk from the nearest APM or a PUDO point. And also almost 1%, well, I think much less than 1% market share in the UK. UK being the largest e-commerce market in Europe with about 3 billion parcels sent and received a year. And Inpost had only 20 million in 2022. But keep in mind, it is growing triple digits in the UK, almost 170% or something like that year on year. So it can be double the size in the UK only next year. And also they're proud of calling themselves number one agnostic APM network in France and UK. Let's move to returns. Return on equity is 183%. That's a very, very satisfying number, astonishing actually. If they can manage to keep that kind of return on equity, they will grow fast as hell. But because of the large amount of debt, we have to consider return on assets, and calculating that gives us, depending on whether we use assets numbers from end year or average asset numbers from like beginning and end of year, we have between 5.2 or 5.6 return on assets. Return on capital employed, that's return they generate on actual capital including debt. So that is, if we take into the account only end of year total assets and current liabilities, that's 14.3%. But if we average total assets with the beginning of the year and current liabilities as well, that gives us amazing 30% return on capital, and that's employed. That's actually really, really good as well. Now that wraps up our fundamental analysis of the stock, and so let's move on to risks. And this is a story I have to tell you because many investors in Poland are really afraid of investing in Inpost because of what had happened on Warsaw Stock Exchange in 2017. Now, back then, Inpost was competing directly with state-operated, state-owned post operator Poczta Polska, and so it was playing the game with someone who sets the rules of the game. And because Inpost was delivering the court orders, road tickets, and all sorts of letters, they were actually losing money, and they were deep in debt as well because they used that to grow APM network. So at some point, they were so buried under debt and losses that Rafał Brzoska, the CEO of the company, he had a choice. He was approached by Advent. Advent made the proposal of acquisition of Inpost. One of the particulars of that deal was that Inpost has to be delisted. And obviously, if you owned the company, if you bought it at the IPO in 2015 and held it throughout to 2017, that was only a year and a half Inpost was on the Warsaw Stock Exchange, but you would have lost 50%, roughly 50% of your investment. Now, the CEO of Inpost didn't really have a choice. That's my view on that, because, well, you're facing a bankruptcy or somebody buys you back and pays all your debts and then allows you to turn around your company, focus on APMs and do what they do now, and they do it amazingly well. But you obviously have to buy back all the shares from the Warsaw stock market. So obviously, if you own the shares and you were forced to sell them at a loss, and then you watched Inpost IPO for 20 euros per share, which is obviously massively more than you sold it. You've sold your shares when they bought them all back. You feel screwed. But at the same time, if the CEO hadn't do that, and the company would go bankrupt, you'd lose all your money. So, which is better, losing 50% or losing all of it? You have to consider that. And the reason why everybody's obviously iffy or a bit worried about what's happening now is since the IPO in 2021, basically about 20 euros per share. The company is about 10 euros per share now, so again 50% loss. They have high debt as well, so it looks similar to what happened before. What's stopping the CEO from buying back shares with 50% discount to the price he sold them for? But you have to consider the differences, and the differences is massively involved American institutions. You've got BlackRock sitting on shares of Inpost. You've got Vanguard. You've got Advent. you've got Fidelity. So you can't really do the same thing right now. Also, Inpost is making money and it's actually growing at astonishing rate. So that's a massive difference to what happened before. But it is a risk, you have to consider it. Of course, there's another risk is, for example, in the UK, they are struggling with servicing those APMs because they do it externally. Like in Poland, they actually have their own logistics. They have depots, they have logistic centers. The same goes on in France, because when they purchased Mondial Relay already had some depots and logistical centers, and now they're adding to that structure, to that system. So, but they don't have any in the UK. So that's a risk. You have 5,000 APMs, automated parcel machines, but somebody else is servicing them, not you. So that influences the customer experience, sometimes in a bad way, because they started with literally the worst courier company ever I had to deal with, and everyone else, all sorts of opinion surveys just confirmed that it's just crappy company. Then they moved to City Sprint, which was better, but I don't think it had enough. It was big enough to service the parcel lockers in time. So right now I think they're looking for a third option. Maybe they will try to do their own logistics in the UK, but that will involve massive capital expenditure. Right. So, but that is a risk. There's also other risks, and that's in the rising interest rates, because obviously they've got massive debt, and so on. They do recognize that fact. Now, key focus areas for 2023, according to the company in Poland, they want to do repricing with positive impact on price mix and margins. Cost inflation, according to the company, will continue to persist, but good visibility to expand margins in 2023. Strong free cash generation, and that will be invested mainly to international expansion, because the capex will be much smaller. In Poland, they don't put up as many APMs anymore because they have 20,000, so they can slow the growth over there and focus on France and the UK and Italy and other markets. So in France, they want to improve their operations with day 1 and day 2 day plus 1, day plus 2 delivery. They want to increase business to customer parcel volumes, and they want to improve some margins on EBITDA. In United Kingdom, they have to resolve logistics bottleneck, which I just said, and they struggle with servicing those APMs. And so that's the main task for 2023, as well as establishing platform for logistics model to benefit from economies of scale. They want to launch a business-to-customer proposition, which they still haven't, and focus on growing merchant adoption, which they are doing quite well in the UK, but they could probably improve on certain levels there. So that covers Inpost. I think we've got everything touched a bit. My opinion is they will continue to grow considerably in the future. I think they will grow faster than analysts' consensus. That's my point of view on that company. But obviously, before we wrap up, I have to remind you, my dear listeners, that the information provided in this podcast is for educational and informational purposes only. It should not be considered as financial or investment advice. And I encourage everyone to do their own research and consult a professional financial advisor before making any investment decisions. And that basically wraps up our episode. In our next episode, we'll be discussing meta platforms, a company behind Facebook, WhatsApp, and Instagram. So be sure to join us as we dive into their technical and fundamental aspects. Don't miss it. Until then, happy investing, and remember, bridge the gap between lines and numbers for smarter investing. Goodbye.